we take a look at some of the movers here on Wall Street, and I'm joined by Diane King Hall is with me, and we're looking at Nike today also. I mean, yesterday we were talking about On Holdings and those sneakers doing so well. Now we get Wells Fargo with a move on Nike today.
Yes, indeed, and adding more strength to Nike because it's been getting some love this week, and certainly much needed given how shares have performed so far this year. So Wells Fargo becoming more bullish on Nike. They've upgraded it to overweight from equal weight, and overall just more confidence after a tough stretch for this company. They've lifted their price target to $75 from $60. That signals, when you think about recent levels from, say, for instance, yesterday, just double-digit upside from here. They say that visibility is finally improving after more than 3 years of negative earnings revisions. They say that the profits and margins appear to be bottoming, so setting up the stage for a turnaround. And keep in mind, Elliott Hill said that turnaround would take time. Wells Fargo expecting Nike's earnings cycle to flip positive over the next 6 to 9 months. They are seeing sales stabilize and margins recover. They've raised their EPS forecast to $1.70 for fiscal year 2026, and for fiscal year 27, they see $2.40, and they see even more, quote, bullish blue sky case of up to $3. So they talked about this return to growth roadmap, and they like what they're saying about the classics. Nicole, you and I know this, the Air Force One, the Air Jordan 1s. They said they've been a drag, but that drag may have peaked, so maybe there will be some return. Throwback, like on Throwback Thursday.
That's right. All right. Next up, we have CMCSA, the Comcast, and this is with NBC story. Let's hear about this.
Yeah, I think part of this is about all the shifts that we're seeing in the streaming landscape and trying to lean into what's working. And so for Comcast, it's about sports. They're going to, this according to a Wall Street Journal report, they're going to be relaunching the NBC Sports Network. So a new version of that in the fall, and reviving their former sports cable network. So they'll carry sports content that's available on Peacock. Think NBA games, Big Ten football, Premier League soccer. But it won't just be streaming. It's also some legacy that with this relaunching this new linear cable sports channel. It flies in the face of the prevailing view that cord cutting is happening. You're seeing this traditional drop in TV subscription. Look, I'm sure you went through this when you looked across Disney, because even though Disney had growth in streaming, that was offset by declines in traditional TV. But right now, Comcast doing the reverse of that, at least when it comes to sports, leaning more into that on both the streaming and the traditional side, Nicole.
All right, and you have a lot that you're going through, so I'm making sure to get to all of them. TKO, we talked about Polymarket a bit.
That's right. Yeah, I mean, and look, we have executives from those companies who rang the opening bell today. It comes on the heels of them, TKO signing this multi-year partnership with Polymarket, the prediction marketplace. So this would integrate real-time prediction markets into live sports, live combat sports here. So in other words, UFC, one of the first sports organizations to use prediction market technology within how they operate. They'll just display real-time fan sentiment and momentum data. That's essentially basically live odds and crowd perception visuals. Gives this new layer of interactivity alongside traditional sports betting. For Polymarket, that extending its footprint beyond politics and global events, like, you know, a lot of times we look at Polymarket and Kalshi for what's going to happen, what's anticipated with how long the shutdown is going to last. What is the Fed going to do, you know, with regard to interest rates? So now leaning more into sports as well. And why I think you see this relationship happening is there's, you know, prediction markets are seen differently in terms of how regulators see prediction markets versus sports betting.
Okay, and we continue on. We have Dollar Tree with a down arrow today.
Yeah.
Goldman downgrade?
Yeah, double downgrade for Dollar Tree from Goldman. They're downgrading it to a sell from a buy. The new price target is 103. So you're seeing some pressure sitting around that level right now, down 3% today. The analyst says upside to shares gets harder from here, hence the downgrade. Goldman citing concerns around lower income consumers and preference for other discounters. They see having better value propositions, Nicole.
All right, Diane, look, you know, you went through a lot of names here. Nike, Comcast, TKO, which rang the bell, Dollar Tree. We have a lot that we covered there. When you think about some of the themes that you've been following, anything you want to add here?
Well, I think I like the story around Nike because, you know, it's a company that has struggled so far this year, and there were a lot of bets on, you know, this could have potentially been the year for a turnaround for Nike under Elliott Hill. And then, you know, even he, off the back of their most recent earnings call, essentially said it's going to take more time. But now you see sentiment shifting and the view that the bottom might be here in terms of Nike. You mentioned how On performed. On is obviously still a leader, but Nike may be getting back on the right foot now in terms of how it's performing. You're seeing increasing bullish sentiment around Nike, and it hasn't been that way for some time. So it may be starting to get out of the woods, Nicole.
And really, that double downgrade, pretty unbelievable. From a buy to a sell on Dollar Tree,
Absolutely.
which is down 3%. Great stuff. Thank you so much, Diane King Hall. Nice to see you. A lot of names there.